You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 30th day of May, 2024. Now, we actually have one more trading day left in the month. 30 days has September, April, June, and November. All the rest have 31, right? Except February. That's 28 or 29. 30 days has September. Yep, true deal. All right, so tomorrow, last trading day of the month and the week. Okay, fair enough. Anyway, thanks for joining. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. This is our second one. The first one is private, members only, and those taking the 1-week free trial. If you haven't taken the 1-week free trial, go to mytradingiq.com, and at the very top of the page, there's a link that says 5-day free trial, no credit card required. Just click the link, fill out the form, hit submit, and in most cases, same day, we'll get your desktop set up, get your indicators indicating, and then your 5-day trial will actually begin the following day. Now, tomorrow's Friday. That's okay. You can still sign up today. You'll get an introductory session tomorrow. Then you'll have Saturday and Sunday. Some markets never sleep. And then you'll have Monday through Thursday of next week. So you never have to worry about the time of day or the day of the week or weekend that you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. Which in most cases, it will. So don't let that stop you from signing up today. And for those of you that have been on the trial for the past week, tonight is the members only workshop. You should have gotten an email yesterday or today on how to become a member. If you did not or can't find that email, call 949-42-EMINI or email support@cfrn.net, and we will make sure you get into tonight's members only workshop. Okay? All right. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways to join live, but the best way, you only have to do this once, just go to mytradingiq.com, scroll down to where it says afternoon broadcast, click that link, fill out that 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before this broadcast starts. Inside the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of that is you'll have access to the question box, so you can ask questions and participate in the discussion. course, there will be days when you're out of the office, away from the desktop, and you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You could do both of those via our YouTube channel, which is very easy to remember, youtube.com/CFRN. You already got the YouTube part memorized, so all you got to remember now is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, fast forward a little bit, go to another day. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast. youtube.com/CFRN. Okay, we'll open with our daily devotional and a word of prayer, as we do every day. Topic of our devotion last week and this week, I think we're going to wrap it up tomorrow. It's been a study of the book of James. The title is Faith Works. I'm going to share some scripture with you, chapter 5 of the book of James, verses 13 through 18 from the Message translation. Are you hurting? Pray. Do you feel great? Sing. Are you sick? Call the church leaders together to pray and anoint you with oil in the name of the Master. Believing prayer will heal you, and Jesus will put you on your feet. And if you've sinned, you'll be forgiven, healed inside and out. Make this your common practice. Confess your sins to each other and pray for each other so that you can live together, whole and healed. Prayer of a person living right with God is something powerful to be reckoned with. Elijah, for instance, human, just like us, prayed hard that it wouldn't rain, and it didn't. Not a drop for 3.5 years. Then he prayed that it would rain, and it did. Showers came, and everything started growing again. James 5, verses 13 through 18. Now, did I say now? I did. Now what? Okay, now this. In the book of James, he's constantly pointing us to the fact that the Christian life is about glad-hearted obedience. Are you faithful or faithless? After all the practical application of spiritual truth that James has addressed for 5 chapters, he started to close his letter with a call to prayer. We've done the same thing throughout this devotional. At the end of each day's study, we pray. You were prompted to respond to what you understood and to ask God to continue working in your heart so that your actions would increasingly bear the fruit of faithfulness and righteousness. Prayer is infinitely more than a transition in our lives from our everyday routines to a spiritual moment and then back again. Prayer is ongoing communion with God. As Paul wrote, pray without ceasing. If God is the source of our life, salvation, hope, and righteousness, and He is, then prayer is the way we approach Him in utter dependence and satisfaction. James repeatedly pointed out that knowing the right things about God isn't the same as a faithful life in relationship with God. Faithfulness requires relinquishing the delusion that we can be self-sovereign. It's having our eyes open to areas of our lives in which we're still white-knuckled, clinging to control, so that we can let them go, fully surrendering them to the Lord. Faith works. James' entire letter has exhorted us to live faithfully as followers of Jesus. From beginning to end, he insisted that the Christian life puts into action our belief in God's sovereign power and goodness. Join me in a word of prayer. Heavenly Father, thank you for the words in James 5 that we just shared. Help us to learn to pray in all circumstances, whether in suffering or joy. Teach us to seek your healing and forgiveness through earnest prayer. Guide us to support one another in faith, lifting each other up and trusting in your powerful intervention. It's in Jesus' name we believe and pray. Everybody said, amen. Amen, and happy Thursday. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow down 315 points. NASDAQ down, now for the Dow, that's almost 1%. NASDAQ down 80 points, S&P 500 down 15, but the Russell 2000, our man in the street, is up 23 points. That's a little over 1%. I suspect, now when we go to the charts, I'll show it to you, but I suspect we got a bounce coming our way. I wrote about it this morning in the discussion group, so you may have already read it, you may have already looked at the charts, but I explained to you two possibilities, and I'll show it to you when we go to the charts. In the commodity basket, crude oil down 97 cents, trading 78.24 last. That's a drop of 1.25%. Gold down 90 cents, trading 23.40.30 last. Silver down 90 cents, trading 31.45 last. That's a drop of almost 3%, or almost $5,000 per contract traded. When the price of silver moves $1, it's worth $5,000 per contract traded. And the Asian markets at the close. Nikkei down 502 points, over 1.25%. The Shanghai down 19. The Hang Seng down 246, which is almost 1.5%. And in the European markets at the close, FTSE up 47, the DAX up 23, the CAC up 43. So we had a red day in Asia. It was a green day for the UK. Not a big green day, but it was a green day. And we've got mixed markets. It is a mixed Radio Thursday here in the US of A. It's really interesting to see the Dow so far in the red and the Russell so far in the green. Now the Dow's down almost 1%, 318 points. The Russell 2000 up 24 points. That's a gain of over 1%. So will the Russell lead the other indices higher? Now, there is no one market that always leads the others. If life were that simple, we would have no we'd have no need for indicators or live training rooms or any of that kind of stuff, would we? If you're putting time and energy into trying to figure out which one moves first, save yourself a lot of heartache, because there is no one market that always moves first. However, the Russell 2000, because it represents 2,000 small cap companies as opposed to the S&P, which is 500 large cap companies, sometimes, again, not every day, not even every week, but sometimes the Russell will give us an indication of what the other indices might do. And this is a huge divergence here. I don't remember seeing a divergence this large in quite some time. So we'll see if we get that bounce or not. Now, should give you this news first. Traders reported issues with live pricing for the S&P 500 index and the Dow Jones Industrial Average, which haven't shown pricing updates since 10:41 a.m. New York time. This was written at 8:38 a.m. Mountain Standard Time. Now, they're talking about the actual index, which I wrote a bit about yesterday in the discussion group. The futures market and the price you see on the futures is one thing. The index is something completely different. You can't actually trade the index itself. You'll recall the other day I showed you that should have it right here. Pretty close. Hang on. Probably not. Yep, I do. So let me show you what I'm talking about. See, this is the S&P 500 index. You can't trade this. That's why man had to create derivatives like futures and options, etc. So what they're saying is that there's data issues with the S&P 500 index. The reason I posted this in the discussion group yesterday and earlier in the week was this huge bearish engulfing candle. I think it was the beginning of last week. I read you an article from Bloomberg where they stated that they believed a double top was the most bearish candlestick signal that you could find. And I said, yeah, well, you know, everybody's got their opinion, and mine is a bearish engulfing candle like this. See how the high is higher than the previous day, the low is lower than the previous day. It engulfs the previous candle. In this case, it engulfed 1, 2, 3, 4, 5, actually 6 days. And according to technical analysis and those who read candlesticks, that should send the market definitely lower. So it's the index where they're supposedly having data issues. You may not have noticed it because you're trading futures. So anyway, just wanted to share that with you. And if you haven't read what I wrote in the discussion group yesterday and earlier in the week, if you have access to it, you should probably go read it. Even if you're on the trial, you can read it in the trial discussion group. Okay, with that news out of the way, what else we got? The GDP. The U.S. economy grew more slowly than initially thought during the first quarter. Bureau of Economic Analysis second estimate of first quarter U.S. gross domestic product showed the economy grew at an annualized pace of 1.3% during the period, down from a first reading in April of 1.6%. The update of the first quarter growth metric primarily reflected a downward revision to consumer spending per the BEA. Personal consumption in the first quarter grew at 2%, down from a prior reading of 2.5%. The reading came in significantly lower than fourth quarter GDP last year, which was revised up to 3.4%. You're going to see more and more monkey shines as we approach the election. These economic reports. That's why we don't even trade them. We teach new people, don't trade them. Whether they're right, whether they're wrong, you don't know how traders are going to respond. It used to be good news would always send the market up and bad news would always send the market down, but not the case anymore. Okay. So let these reports come out, let the market digest the information, and then when the market returns to its normal rhythm, that's when you want to get back in the water. Now, how about that NVIDIA? NVIDIA's highly anticipated earnings release delivered. The company's financial metrics blew past Wall Street expectations, sending shares soaring nearly 20% in the 3 days after its earnings release. But the widespread stock market rally many thought would follow, didn't happen. The S&P 500 is now off more than 0.5% since the chipmaker's earnings release after the closing bell on May 22nd. So everybody thought NVIDIA would move the entire market higher. But NVIDIA is no longer the stock that is the market, and will likely end the market's low volatility hush of the past 2 weeks. The S&P 500 has slipped from record highs since the NVIDIA earnings release as investor focus has shifted elsewhere. Stocks slid despite a 10% surge in NVIDIA shares the day after the company's earnings release, as a hotter than expected reading on economic output had investors scaling back their expectations for interest rate cuts this year. That trend has continued this week as a rise in the 10-year Treasury yield to its highest level since the start of May, helped drive a decline in the S&P 500 over the same period. There is no precedent for a stock of NVIDIA's size having its post-earnings share surge ignored by the broader S&P 500. This divergence is a catalyst for greater movement at the S&P 500 level in front of other event catalysts. The writer of this article, Emmanuel, somebody, give him his due. What is his name? Julian Emmanuel. Okay. So, Emmanuel listed upcoming inflation prints, such as tomorrow's PCE. This is a huge one, guys. This is one you definitely want to put the mouse down. Personal Consumption Expenditures Index release and the June Federal Reserve meeting next month. That's a big deal. But tomorrow, the PCE, that's a big one. And if that thing's hotter than expected, see a huge sell-off. If it's in line with expectations or better than expected, then that could give us that bounce that the Russell is kind of hinting at. So we shall see come tomorrow. All right. That covers the news. Let's go to Logic 247. This is our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude, gold, silver, euro, bonds. We're in week 304. That means we launched Logic 247 304 weeks ago. First we had a beta test, then we launched. Now 304 weeks have gone by. And over those 304 weeks, we've issued over 16,700 individual handcrafted alerts. Over 16,700. I can't even believe I'm saying that, because I stood here and looked at the chart and figured it out and typed it and hit send. Over 16,700 times. Mind-blowing. The good news, we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure. In a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now we had a holiday Monday, so far this week, last week we ended up with 10% stopped out. So far this week, again, Monday was a holiday, so this only represents really 2 days, Tuesday, Wednesday. Although I think I put something out Sunday night, maybe something Monday night, a couple. Anyway, 25 alerts. When Valerie did the recap this morning at 7:30 a.m. Eastern, we were still waiting on the outcome of 4. That gave us 21 actionable alerts, which so far, nothing has been stopped out. 0%. But it's early. It's only Thursday. We still have tomorrow. So I'm sure something will stop out between now and end of business tomorrow. Have we ever finished a week with 0% over the last 304 weeks? I believe one time. So I'm certainly not expecting that. But if it happened, anyway, this is about as good as it gets. So now with the logic alerts, for anybody that's new or on the trial, you get an entry price, you get an initial target. It's good for your goal for the day. And then you have additional targets and then a final trade to target. Those targets come from me looking left for you at previous swing highs and swing lows to determine where the targets or obstacles, whatever you want to call them, should be. The purpose of the alerts is not for you to just trade them so you don't have to learn how to trade. It's to help you learn how to trade. When a logic alert comes out, if you'll go to your 30-minute chart of that market, or a horizontal line at the entry, horizontal line at the initial target, horizontal line at all the other targets, and then step back and take a good look, you go, whoa. Within a couple weeks, you'll be able to spot all those windows of opportunity yourself. See, we want you to become self-sufficient. If your goal is to trade for a living, that will never happen as long as you're depending on someone else to tell you when to get in and when to get out. You've got to learn how to read the chart, understand what it's telling you, because in doing so, you then know instinctively what the next high probability move is. And about 20% of the time, the market's going to do something completely different. $16,700 plus alerts, the average on a weekly basis, 20% or less. Now, all those alerts, that was my best work, but we'll call it 20%. 20% of the time, my best work didn't pan out. So if you're still looking for that silver bullet, that holy grail where you never get stopped out again, you need to hang up your mouse or get a reality check, because that world doesn't exist. That thing doesn't exist. It can't. There's too many factors involved. Too many traders, just too much stuff. Okay? Any trader out there, for any reason, can pull an order, put in an order, change his mind, and that affects the whole market. Now, you've heard the thing about, if a hummingbird's wings flapping in the Amazon rainforest causes an avalanche in Colorado. There are just too many factors. Okay, to have such a thing would defy the laws of science, physics, even God. When God created Adam, he did not give Adam the ability to change the past or know the future. And those two things are inextricably linked for eternity. Professional traders waste no time or energy looking for something that they know can't exist. They just go, oh, you see Michael every morning. Oh, get stopped out. What do? You wait for the next opportunity to present itself. And you execute it just like you're supposed to. That's where so many traders get tripped up and struggle, because they can't handle the fact that they're not always right. I honestly believe women handle it better than men. Men always want to be right. Now, along with the logic alerts, where you have got the entry price, initial target, multiple targets, trade to price, all that. With the CTAs, you're stepping up your game and learning to look left yourself. Okay? The logic alerts can come out anytime, day or night. Futures trade around the clock, and we have traders around the globe. But the CTAs are published as a static report shortly after the beginning of each session. Now, today's the Thursday session. That's going to end at 5 p.m. Eastern. tonight at 6 p.m. Eastern. That will be the beginning of the Friday session, even though it's still Thursday night here in the U.S. So last night, the Wednesday session, the Thursday session started Wednesday night at 6 p.m. Eastern last night. And so 20 minutes after the open, I got these published. Okay. First thing you do when the report is published is go to the 30-minute chart of whatever markets you trade. Make note of where price is at this time. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's trying to reach the long target. If price gets below the 30-minute BBC, it's trying to reach the short target. BBC means bull-bear cross. It's the green line you'll see on all my charts. When price gets above the green line, we're bullish and anticipate higher prices. When price gets below the green line, we're bearish and anticipate lower prices. Relative to whatever time frame you're looking at. Daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart. But for the purpose of the alerts, it's always a 30-minute chart. With the CTAs, you're going to start learning to look left yourself to spot potential obstacles. And you're going to learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the zone overhead. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th, 2009. Almost 15 years. They come out Monday morning at 6:15 a.m. Eastern. Unless Monday's a holiday, as it was this week, then they come out Tuesday morning at 6:15 a.m. Eastern. But once they're published, whether it's Monday morning or Tuesday, mostly it's of course Monday, they're carved in stone the entire week. They do not change in any way whatsoever. Just resist the urge to make it more complicated than it needs to be. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. All right. Let us look at the daily chart of the S&P. Now, I published a chart earlier today. We had a little red candle dangling below the BBC. But I said, here, let me show you what it said. Go. Here we go. All right. See, it was a little bit red right there. Okay. We've now slipped just below the daily BBC and the 24% fib retracement of the last leg up. This is the last leg up. This is the 24% fib retracement. This is the daily BBC. So I went on to say, the question now is, do we close today below it? We know the pullback holds more often than not. If we do close below it, then the question becomes, do we open and close below both of them tomorrow? See, we've got support times 2. If so, there's lots of room to drop to the 38 and the 50% fib retracement of the last leg up. Pull back to the BBC holds more often than not, even when we spike it, as we were doing, as we've done today. However, as mentioned yesterday on the afternoon broadcast with red and falling overhead, this might be the time we trade through the daily BBC. The issue is we have support times 2 with not only the daily BBC but also the 24% fib, both as potential support. See, daily BBC, 24% fib, that's support times 2. But red and falling overhead is bearish. And this candle's not giving you a lot of information. It spiked below, but our buyer is going to be convinced enough to try to run this back up. Keep in mind what I just shared with you about NVIDIA. The fact that we didn't get a broad market rally from NVIDIA, that's bearish. Okay? This is bearish. But again, the Russell is outperforming the other indices to the upside in a very dramatic way that I've not seen in quite some time. Whatever you trade, whether it's futures, stocks, crypto, Forex, ETFs, doesn't matter. I highly recommend that you spend 2 minutes with the daily chart before you drop to your smaller time frames and start trading. Institutional traders look at daily, weekly, and monthly charts, where you and I, 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. They have account size and trade in such size that they're the ones who actually move price. So, if we can peer over the shoulder of the deep pockets that move price, and when they're doing something, and not really doing anything right now, but when they're doing something, like yesterday, it was like shooting fish in a barrel, right? All you got to do is do what they're doing long enough to get your goal for the day. Put the mouse away. Again, it doesn't have to be the S&P 500. It can be whatever you trade. Just spend 2 minutes with the daily chart so you can identify where major resistance is, where major support is. Because once you go to the smaller time frames, a lot of this you won't be able to see. All right, 30-minute chart where all the alerts are created. When price rallies up to a weekly trading zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. See how we came down? Now, only 3 things happen at a weekly zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. So we opened last night right at a zone, right here. This was the opening candle. 20 minutes into the life of that candle, I published the CTAs. And in the next candle, we dropped right to it, 52.65. More than enough to get your goal for the day and put the mouse away right there, one candle. Then we traveled below it. If you look left, you'll see why the market found support there. When the market finds support, it will go look for resistance. When price rallies up to a weekly zone, what do we expect? Resistance, until proven otherwise. That resistance sent us back down almost to this low, but buyers came in early and have driven us back up, and we're now getting ready to do battle with the zone again. If we can overcome the zone, then I would say 52.80 up to 52.88. It's a nice 8-point window of opportunity. Vertical lines operates today, Thursday, from Wednesday, from Tuesday. On the Dow, here's where we opened last night. 20 minutes into the life of that 30-minute candle, the CTAs were published. And boop, there we go, right to the target. We bounced to the BBC, We spike it, but the pullback holds. It holds more often than not. And we drop back to the target again. Now we're above the BBC. And we've got blue and climbing right here. That's bullish. But you've got potential resistance right there at that high. We can get above that high. Then from 38,340 up to 38,440. That'd be 100 points. $5 a point. That's $500 per contract traded. Now the Russell. Here's where we opened last night. Dropped right to the target. Consolidated. Got above the BBC. Ran up to the zone. Consolidated as we do. See, coming down yesterday, we consolidated. And then on the way up today, we consolidated. That's what happens 70% of the time. 20% of the time, price gets rejected. And then 10% of the time, the slice. And so, after the consolidation, we took off based on that 8:30 news. And we ran up to the target. And eventually to the zone. Consolidated for an hour. And now we're trying to get to the zone overhead. And we expect that to be resistance till proven otherwise. In Q. This was the opening candle last night, and we dropped right to the target. This candle, just this candle alone, which opened at 743, dropped to 720. Yes, 23 points. 20 points at $20 a point, that's $400 per contract traded in that one candle. And we consolidated, and then we dropped. But you see how the step line crossed right here? That's an indication that we're going to most likely pull back to the BBC. And we did. Now we did drop a little lower, which is unusual. Usually when that step line crosses, we see an immediate move, but we continued dropping. But it held true. Pulled us right back to the BBC. In fact, we traded through it and then retraced, and the pullback held. And then we traded up. This high right here is, can't really see the wick, but there's a wick right there. And that sent the market back down to the zone, all the way to the zone where we found support. Bounced up to red and falling, resistance. When the market finds support, it will go look for resistance. When it finds resistance, it will go look for support. That's true of futures, stocks, crypto, Forex, ETF. It's how markets work. Here's where crude opened last night, right below the zone. Dropped to blue and climbing. Caught a bounce to the BBC and the zone. The pullback held. It holds more often than not. And took us right down to the short target. Support sent us to resistance. Resistance sent us back to support. Support sends us back to resistance. Resistance sends us to support. Thursday, Wednesday, Tuesday, Monday. We're sitting on top of support created Monday. Gold. Here's where we opened last night. Dropped right to the short target. And then bounced to the BBC. Pullback held. See how the pullback held, the pullback held, the pullback held. As we come through the target, we hit the weekly trading zone. We expect that to be support, proven otherwise. Support sends us looking for resistance, back to support, back to resistance, back to support. Then we get resistance at the zone. That drops us. We spike the BBC, but the pullback ultimately holds and takes us all the way to the long target where we put in a little doji. When that happens, you should take your profit and go. Pull back to the zone and the BBC. We expect it to hold until proven otherwise, and it has.
Okay, I got here.
Are you ready?
Sorry.
Okay. All right,
Yeah.
this is the last one. Silver, we consolidated coming out of the gate last night, and then we dropped right to the short target. And then support here, came from here, support here. Just go look, it's there. Then we pulled back up to the short target, resistance. Now we're back below the BBC. And on the daily chart, we still got a nothing candle. We've gotten below the 24% fib retracement of the last leg up, and we're right at the BBC. We spiked it this morning. We had a little bit of red there, but now nothing. I think the markets are going to wait for that PCE data tomorrow. It's going to be really important. It's a market mover. Please put your mouse away. And when all the fireworks are done, the dust settles. The market resumes its rhythm. Trade. Okay, Michael's going to give us a recap of what happened in the live training room, and then we're going to go live on TradingView for 30 minutes. Then I'll wrap it up with our good word for the day.
All right. Good. And I was doing the go to meeting thing. That meeting with Rick ended up lasting a lot longer. I forgot that he's in Australia. He's exactly 12 hours ahead of us.
Oh, no problem.
But go to meeting, for me to access it, to do it the way that I used to do it, I have to have 2 sessions running on my side. And
really,
it is just hassle. Yeah, they really messed that thing up. Either that or I don't know how to use it anymore. And
well, I had to use it the other day for some reason, and it was very uncomfortable.
Okay.
I prefer the GoToWebinar much more. So, all right, you ready? We lost you. Michael, are you there? Can you guys hear Michael? Oh, it looks like he lost the internet for a minute. So
everything just came back.
Okay, yeah, because if you were talking, we couldn't hear a word you said.
Yeah, I said, that just happened with Rick too. I don't know if it was me losing audio or him losing audio, and you just stopped talking, and okay, so it was me.
Okay.
All right. Well, that's pretty bad.
Well, but it looks good.
Me having fiber optic now.
If your audio drops again, I'll let you know.
Okay. All right. Well, let me just get into it because I'm running. And this morning I ran late. Everything's running late today. Grr. I'll try to be there on time tonight. All right. So if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com. Go to the homepage here at mytradingiq.com. Right here is to sign up for your free 5-day training. Click on that. There is no credit card required for the trial. Click on that. Okay. No credit card required for the trial. When you do that, you can be brought to this registration page. Now, this registration page only has 1 day left in it because it's up through right now. This will be filled up again tomorrow with all kinds of new information for next week. But you'll be brought to this registration page. On this page, all we ask for is your first name, your last name, your email, and your phone number. And down here at the bottom, if you have an NinjaTrader, give us your machine ID. not your niche trader ID, machine ID. If you have TradingView, give us a TradingView login ID. All right, login ID is all we need. TradingView login ID. Yes, that is what we need with that. Okay, that's how you get the free trial. Now, today I ended up talking through everything today. So we ended up, my last trade I think was a stop out on the ES, and that brought me down to -10 on the ES, -125 per contract from where we were. I mean, at the high of the day we're up at 400 and something, but we ended up right back where we started at $180 a contract. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we made 40 on the NQ, nothing on the Russell, 21 on the YM, and -10 on the ES. Put us at 180 on the morning session. Today, it took 13 minutes and 6 trades to get to the goal for the day. At that point, we're up $3,060. Now, that is with 17 contracts on, $3,060. We took a total of 11 trades this morning. So on the month now, we're at $6,380. It's over 21 business days, averaging $303 per contract per morning session. On the year now, we're at $40,115. That's over 102 trading days, averaging $393 per contract per morning session. Now, if you were to follow the 24/20 blueprint, which says you trade until you get your goal for the day and then you stop. And when you get that goal enough consistently to earn $2,000 per contract in profit, then you add another contract. If your goal is $100 per contract per day, then that should work out to be one new contract a month. All right. And so if you did that, you added one contract a month, quitting when you got your goal for the day. So far this year, you would have only had to work 36 hours if you did it like me. Only would have had to work 36 hours, and you would have averaged $1,218 an hour so far. Now we only have 1 day left this month, 1 business day left, where we're going to be in 5 contracts. That would put us at 6 next month if you started that plan this year. Now, I'm going to be at 18 next month because I started that plan last year in January. So I'll be at 18 on Monday, 18 contracts, all right, following the 24/20 blueprint. So I'm averaging $6,087 an hour. I mean, the $1,218 an hour is awesome. If you're doing the 24/20 blueprint, starting this year with 1, you're at $1,218 an hour now after 36 hours of trading. That's awesome. That's where you want to be. All right, let's get into what we did all morning. Okay, now we'll start out with the YM. The YM is kind of stripped down because I was using it for training this morning, but we can go through all the trades that I did take and all that on here. I believe I still have all those on. I did. Okay. So here we are on the YM. Our first trade on the YM was right here, and we picked up 16 ticks on that one right there. And then the next trade was over here on the YM, and we picked up 5 more ticks. That put us at plus 21 on the YM. Those are only 2 trades on the YM. You can see there were some more trades throughout here. Blue arrows, blue arrows, blue arrows. Now I only have the upper band on here. This is actually the ribbon and the black line in the middle. This isn't the other outer band. This is the middle of it. The other outer band would be down here. Right, so you're just looking at a little piece of the information here. But when it's going down and it's pulling back to test the ribbon in the black line right here, that's when you trade. When it's going up, it pulls back to test the ribbon in the black line right there. That's when you trade. Good information. This is how it would look if you didn't have the context on. If you just had the basic things that you need to place a trade, this is all you have. All right. And so you can see there were some really good opportunities in here during the morning session. All right. I only managed to get 2 of them on the YM. Okay. And over here on the Russell, we had just a few on the Russell. Now, again, I have those turned on. I don't know why I still have those turned on, but we'll go back to the beginning here on the Russell. And I don't see where it is, but we started out on the Russell. Our first trade on the Russell, we ended up with 10 ticks in profit. That was pretty early on that we got that. I think it was in the pre-market. It was right in here in the pre-market. I think we got 10 ticks in profit on the first trade on the Russell. And then the next trade that we took on the Russell, we stopped out, and that put us back to break even, which is right here. We stopped out there, put us back to break even. And we had 1 more break even trade on the Russell. I don't know if I had that penciled in here anywhere. I guess not. All right, so during the break, you're in a weekly trading zone right here. Those actually during the break, there was one blue arrow right here, just one blue arrow that worked out okay. All right. And on the ES now, on the ES, let's go all the way back here. Okay, on the ES, we'll go all the way back here. Here we go. We're getting there. Oh, I went by it. Okay, on the ES, we just had a couple of trades. This was yesterday, wasn't it? Yeah, that was yesterday. We went way too far. That was yesterday. I know I didn't have that today. Okay, so this is all of today right here. On the ES, we had one trade. I don't know where it was. It was probably right here. It was probably this blue arrow, and it stopped me out. It was minus 10 ticks on the ES today. That was my one trade on the ES. And that was it. All right. And on the NQ, everything's getting away from me today, it seems like. Okay, so I'm gonna go here and hit arrow and back. Wow, there's a lot of bars in here. All right, well, we're still scrolling back. I ended up talking through most of that during the lesson plan this morning. So we'll just go back to the beginning. That would have been a lot of scrolling if I was scrolling one screen at a time. Okay, I believe that's it right there. All right, so on the NQ, this was our first trade on the NQ. We stopped out. We were actually long right up in here. It had been here. Is what we got long, and it stopped us out. The next trade that we took on the NQ, moving along here, was right here. Now that wasn't exactly right there. It's NQ. You kidding me? All right, it's still loading up the data for me. Anyway, the I'm supposed to here. Now this is supposed to be super duper fiber optic, and I keep getting disconnected. That is no good at all. All right, so let's. It's now 1:06, so let's just jump into the live stream here with YouTube. Okay. Just more live trading. Now, for the YouTube part, if you have not taken a free trial with us, go here to mytradingiq.com, click on this purple button right here. It's going to bring you to a registration page. On the registration page, all we ask for is your first name, your last name, your email, and your phone number. There is no credit card required for the trial. All right, you can sign up for the trial. There's no credit card required. Give us your machine ID. Give us your username. If you have a machine ID for NinjaTrader, give us the machine ID. It's not the Ninja ID. It's the Ninja machine ID. Right. If you have TradingView, give us a username for TradingView. All right, that's all you need to do is give us that username for TradingView, and yeah, and that's it. All right, once you do all that, then what you need to do is you can go out. You can just go straight here to this link if you want to. or you can go here to mytradingiq.com, go to trade rules down here at the bottom. If you have essential users, click this link. If you have Pro Plus or above, use this link. Right, this is the one that I'm working with right now. Okay, that is this link right here. I'll save it again so you can use it again if you want to. That is that link right there. All right. So, did Rick make it in here? No, he didn't. All right, Mike C. I sent you the email with the information that you had requested, so hopefully you got that. And everybody's getting everything else that I'm sending out. Here we are. We're in a no trade zone here. We're not in a no trade zone here, but we're right up above the weekly trading zone on the ES. We're in a no trade zone coming out of the no trade zone over here on the YM. Actually, not really coming out of it yet. And the same thing here on the Russell. So we don't have a whole lot going on that we can trade right now. The NQ is getting close to a trade. If we get a pullback here on the NQ, we might have something that we can do with that. Okay, if we get the pullback on the NQ, we might just have a little something we can do with that. Okay, great, Mike. Okay, so I've been busy. I haven't had a chance to look. I sent that off to you as quickly as I could in between like 3 other meetings. I got another meeting right after this one too. Partners meeting tonight. Don't forget partners meeting tonight, everybody. On the NQ right now. We didn't bounce off the ribbon. That's why it's a black arrow right here. So now we're hitting the ribbon. If we get an up close right now and it pulls out of the oversold, it's going to give us a green arrow right now. Because right here, you can see we pulled back and we actually hit the black line. So there's the green arrow and there's the trade. Here it is. Here it is. Stop needs to go to break even after 8 ticks in profit. So it's going to get up here to 7. For me to up that stop to break even. Right now, it is in the right place. It's 5 points away. So it's going to hit 7 right there and I'll bump that stop. Okay. Man. And there it is. Stop to break even. Look at my data. It's completely messed up here. Stop to +2, +4, +8. Now we need this to get all the way up here. All right, it's gone far enough right now that it's hit the prior swing high right there. So, you know, anything beyond that is great. And just give us all 30 ticks. Okay, so that was good. That is exactly the kind of trade that you need once a day. All right, that was a green arrow right there. Now, in this particular green arrow, the pullback that I didn't want to get down below was here. All right, in the morning session today, I was going over the pullbacks in the leg lengths, and this leg length pullback right here was proportional to the leg length up. Right, you see, that's what made that one a more attractive trade to me. All right, it's proportional. Come on, man. I want not that, not that there. I want this to retracement. It's proportional to the leg up. See that 50% pullback right there? Entered right out that. So that's the kind of thing that you're looking for. And right here, right now, it's pulling back again, bouncing off the ribbon. That's another one right there. You can jump on that. I just did. Here it is. Stop going to break even. Now, this was a big leg length right here. This big leg length up. That was huge right there. We should get something similar to that right now, which means we should go through this, easily go through this, and keep running up. You see, it's printed all these targets up here from this blue arrow. It's printed all these targets. This one, this one, this one, and this one. If we look at the leg lengths, we'll see how those leg lengths match up with those targets right now. Okay. This is kind of a furtherance to what we were doing this morning. Continuation, if you will, to what we're doing this morning in the room. The lesson plan. See all those leg lengths are hitting all those targets right there. Okay. So we should hit all those targets right now. It should do this right here. It might not do it all at once, like this. Might not do it all at once, come back. Now this did put in a higher swing, so you can jump in again right here. Right there. Now if it goes 8 ticks in profit, I gotta cancel that. It hasn't gone 8 ticks yet. There, okay, we're in. Now if it goes 8 ticks in profit, we'll hit break even. All right, and it just did. So now we're at break even on this. And it should do all this. Okay, all that. I'm going to just lock in 4 ticks on this. I got to point out the last one too. I'm just doing that so that if it does hit me down here at break even, it doesn't slip me and cost me any money. All right, so you see it's taking its time getting up there right now. It's doing these little legs to get up there. This pullback was pretty deep right here. It's losing momentum right here. From the lesson plan this morning, right? From the lesson plan this morning, you see how that leg was, that pullback, that leg, the steeper pullback. So it's losing momentum right here. This is what it should have done. It's lost a lot of momentum. Now it may go sideways here. If you look down here, before it did that last leg up, it went sideways here for a little while before it made that last big leg up. Okay. It could be doing the same thing again right now. See how this got down below those prior swings? This got down below those prior swings. It's the same thing right now. The same pattern. On a little bit bigger scale. All right. Well, that was fun. Let me go out here. Let's see, that's the wrong email. Go here. Hopefully that's the right email. Yeah, we'll just work this out. Okay, we're going sideways right here. We're pulling back over here. Sideways in here. Good stuff. Okay. Nothing here that we can do. Nothing here that we can do, and nothing over here that we can do. This was kind of weird just having it like that, doesn't it? But really, that's all you need to place the trades. You can put the outer bands on the bottom. If you do that, it'll look a little more normal. Okay. But this is really the information that you need. You need to know where the slingshot is and if it's hitting the ribbon. All right. The other stuff is to help you disqualify the trades. The context is to help disqualify the trades. But you got your no trade zones on there still, so that's going to keep you out of that. Right. You can see right now it's completely sideways. You don't want to trade anything there right now. All right. So let's go over here. That was the morning session. That's where I got my goal this morning. Wow, this really turned. I kind of wanted to see. I haven't looked at the crypto at all yet today. I'm kind of curious what's going on with this. And this is on a 7 range, so that's not going to do. And this is, let's put this on the 30-minute. Okay, so Mr's gone down about Bitcoin. Bitcoin on a half an hour is doing okay, but I want to see that on the daily. Right, so Bitcoin's got a blue arrow right here on the daily. That should push it up above the prior swing high. It could get us up to the all-time highs right here. That blue arrow should. It might take some time to do it, but it should. The target level, the next target it's only given 2 targets here because it's only got 2 targets, 2 possible places above it that it could go to. This one and this one, right? So it's got both of those targets marked out for you. 72, 77, 78, 73, 835 is the highest. The highest it's been. Let's see. Yeah. 12 cents. That was back in what, 20? When was that? It wasn't 16. I thought it was like 2014, like that. Yeah, I was still living in Boston. That was a long time ago. Put it on 12 month. I'll put it on an annual and see. It was 2014 back here. If you click on this thing, yeah, click on that and go to data window. You can see over here on the side how low it was in these years. The low on that year, this was low on that year. We had a low of 300 and a high of 398. That was January of 2014. Okay, that's on a yearly. But if we go to 6 month, and this is, I thought we were talking about it before that, Dwayne. I thought it was like 2010, something like that, when we started talking about
it. It probably was when we first started talking about it.
Because here it's 300, 398. And if we'd have bought it back then when we first started talking about it, we'd have been down out here at $300.
Yeah.
Like a few thousand% profit.
We'd be on our yacht somewhere.
Yep. No, instead we waited. And where did we buy it? We bought it right in here somewhere.
Yeah.
What year was this? 2020, 2017, 16. It's right in here somewhere is where we got it. We still got it before the big run up, so that was good. It was after this one, but before this one is where we.
They launched Ethereum ETFs this week or last week.
Ethereum. Yeah, they were saying they were going to do that,
which should make it official. That the big concern has been ETH, Ethereum, or anything built on the Ethereum blockchain. Gary Gensler, the SEC, was trying to argue that those were securities, and now that they've launched the ETFs, we're still waiting on final confirmation. But the word is that proves it's not a security. So that's going to change the landscape for a lot of things and a lot of people going forward, if that holds. So we'll see.
This right in here, when the Bitcoin was happening back here in 2016, 17, Ethereum's still down at $170 or $200, something like that.
It's like a low of $5.81. Did I? Yeah.
That was back here. This is 2016. Yeah, I got the lows there. Yeah. $10. 581. There it is.
We've
July
come a long way, baby. So.
Yes, indeed. Indeed, we have. Let's see. While we're looking at that, we had a couple of trades over here. Now, I didn't get into the purple arrows in the lesson plan this morning. I'll get into that tomorrow. I wanted to cover as much as I could in the lesson plan today for you guys that were there this morning. So I don't have as much to cover tomorrow. So we'll be able to trade more tomorrow because we do have some high impact news tomorrow that should move the markets around a little bit. Hey, Dwayne, did you see the thing that I had shown this morning? Yesterday, I had said on the YM in the morning session, I had drawn this line right here, saying when we were right here. I was
That's
saying
the
if everything
lowest
falls
weekly
apart,
zone right there.
Yeah, I know. I said if everything falls apart right here, this is where it should go. And I drew this long thing, and that looked ridiculous when I drew it yesterday.
Yep.
But look where it went down to.
Yep.
Look where it went down to. I drew that circle in and all that yesterday.
It's 2 weeks in a row that we've traded below the lowest
yeah, it's unusual.
Zone on the Dow. Yeah, that's very unusual. 2 weeks back to back.
2 weeks back to back is. I mean,
now tomorrow, the PCE. The whole world's waiting for the PCE to come out tomorrow. So if they monkey with the numbers, we could see an explosion to the upside. The three of the major indices are in the red today. The Russell is positive by almost 1% or over 1%. So
disconnected me. And let me reconnect. Go ahead, keep talking. I'm just going to reconnect here. It disconnected me the last time. I lost my audio, it seems like.
These are the cash index numbers, guys. I already talked about this with everybody. Dow's down 259 points, Nasdaq's down 65, the S&P's down 9, but the Russell 2000 is up 25, which is 1.25%. It's the only major index in the green.
Yeah.
And sometimes, guys, I said this at the beginning, but let me emphasize it again. The Russell, there's no one index that always leads the other ones higher. But sometimes, you've noticed this over the years, and I've talked with you about it many times. Sometimes the Russell will give us a tip where the market's headed. And I'm thinking today might, that CPE number tomorrow, every article I read, they talk about how important the CPE number is tomorrow. CPE, Consumer Price Expenditure, I think it is.
Yeah,
I guess that comes out at 8:30 a.m. So be careful in the morning, guys.
I was looking at the news. I mean, today, the housing information that came out today was horrible. But we're sort of anticipating it being as bad as it was.
GDP came out today, didn't it?
Yeah, GDP came out too. That was bad too. Go here and we go to more and look at the economic calendar right here.
And an article I shared before you came on was NVIDIA's blowout earnings, which sent NVIDIA soaring higher. But the broader S&P 500 dropped.
Yeah.
And so one stock does not a market make. So
now
suddenly
and that one starts to tank.
all the pundits are starting to become a little bit bearish.
See, the sky really is falling.
Yeah, maybe.
So here it is, the goods trade balance. That was worse than expected, not by a lot, but it was worse than expected. This miss right here is huge. The wholesale inventories month over month. That is a huge miss. They got this medium impact, but that's high impact information. This right here is huge. This miss on the pending wholesales, they're expecting minus 0.6 and they got minus 7.7. It's like a 800% miss. That is huge.
Yeah.
And that just ties right in with everything that's been happening in the day before, and all the bad news that's been coming out about housing.
What's coming tomorrow?
Tomorrow we have all this stuff. This is Europe right here. So there's a whole bunch of stuff coming in Europe. You see what happened when the European stuff came in today. All the stuff that came in Europe today, that changed the markets. They all pivoted right there when all the European stuff came in. Now for us, we have at 8:30 in the pre-market personal income, personal spending.
There's that PCE
core
price
PCE
index.
Price index.
Yep.
Core PCE price index right there. And that's coming in at 8:30. Then we have Chicago PMI coming in at 9:45. This stuff isn't really a big deal coming up at 1. And this Bostic speech is going to be 6:15 at night. It's probably not a big deal. They call it medium impact.
Yeah.
So it might have an impact over the weekend. Like Sunday night when the markets open up again. You might see something happening then. But look at all these red faces right here.
I forget which Fed president it is. I read the article to everybody yesterday. But one of the Feds leaving, and he's being replaced from somebody at where? Oh, Goldman Sachs. How unusual.
Goldman Sachs. Huh, yeah.
How unusual.
Stacking the deck.
Trading makes for strange bedfellows. All right, I'll let you get back to work.
All right. Well, let's go here, right here. This is what I was trying to do. We're on Bitcoin right now. We're at Ethereum. Did we get any more trades? We really didn't get any more trades anyway. There. Well, let's go here and take a look at that. Ethereum's on a run right now too. 4,068. The high on Ethereum is 4,867. So it's 800 away from the all-time high. That's like what, 20% away from the all-time high. and Bitcoin, BTC, right here. Bitcoin did just have a big run. Now I have, see the black line that I have drawn there. I drew that on a daily, I think. But let's go back here to the daily. And we'll see that black line that I drew was over here. And right now, yeah, yep, got the blue arrow. And the last blue arrow took a little while for it to actually materialize into something, but it eventually did. And I was saying, if we follow the same pattern that we followed over here, we should have some kind of a move up right now, and then a little more sideways action. But the next resistance one, the first one is right here at 72,777. This one right here, this arrow right here. You're talking about this right here. 7631, 7631. But the next one up is that the target is looking for is this one right over here. This one, and then this one, the all-time. Yep. That's what's going on there. Yes. I don't know either. I don't know. Trade what's in front of you. That's my motto. It's always been my motto. It's not in front of you, you don't know if it's true. All right. So, well, I guess I'm just about out of time. So I guess
if you want to go over, I'm in no rush. So
I actually can't because
okay.
I have another meeting coming up right after this. And that last one that I did with Rick, that I said, you got 5 minutes and 10 minutes. You have 5 minutes, and I forgot that he's in Australia, and we ended up going the whole time, and all the way up until the start of this meeting.
Mm-hmm.
So yeah, he's one of our old guys from back in 2016.
Oh wow.
Yeah, so we're talking for quite a while. Anyway, I guess I am going to set up right here and say, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial, right? You click on that purple button. There's no credit card required. If you click on that, then you'll be brought to this registration page. This is going to get refreshed, and you have a new registration page there tomorrow. After the morning session, you have a new registration page there tomorrow. If you do start the trial now, you get all of next week. Right? You get tomorrow and next week. Get your indicator set up today, and it'll be good for 7 calendar days. All right.
And everybody that has been on the trial for the past week, if you want to be in the members only workshop tonight, then you need to respond to the email that you got yesterday or today.
Yes, indeed. You need to respond to that.
And do it soon enough so that we can actually make sure you get your invitation and all that.
Yes. And I will get that all out again now. All right.
Okay.
That is it. With that, I'm going to pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
All right. Recap of the morning session.
Today it took 13 minutes and 6 trades to get to $3,060.
Good job. Good job. Okay, guys. We've covered everything. We'll take one last peek, I guess, at the daily chart. Hasn't moved much. It's. Now remember, earlier when I posted that chart in the discussion group, this wick was red. So we have actually moved up a little bit. See it better here. See, on the ES, we've gotten back above this weekly zone. And I think I told you guys 52.80 up to 52. 88, I think I said earlier. Like an 8-point window of opportunity up there. So you may just get a chance to trade that. So keep an eye on it. All right, let's wrap it up with a good word for today. Oh, if you want to become a member, just go to mytradingiq.com. If you have questions, you can call us at 949-42-EMINI. Email us support@cfrn.net. 2 hours of live training every trading day. See, that's why 9 out of 10 new traders fail, because they don't have someone to teach them how to trade. As a passport holder, you also get one-on-one private mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you also get the Logic 247 alerts, the concierge trade alerts, and you're able to attend the members only workshop on Thursday night. Everything a trader needs, all under one roof, one low price. And I'm going to tell you, the all under one roof is just as important as the one low price. Instead of trying to piecemeal a little something over here and a little something over here and then glob them together, and you don't have to reinvent the wheel. We have a wheel and it rolls pretty good. So, mytradingiq.com. Okay, good word for the day. People pleasing. Many of us have a problem with that. Would you like to be delivered? Acts 26:17 says, I will deliver you from the Jewish people as well as from the Gentiles, to whom I now send you. Paul's ministry began when he met Jesus on the road to Damascus. In that humbling encounter, the Lord said to him, now get to your feet, for I have appeared to you to appoint you as my servant and witness. You are to tell the world what you have seen and what I will show you in the future. And I will rescue you from both your own people and the Gentiles. Yes, I am sending you to the Gentiles to open their eyes, so they may turn from darkness to light. Acts 26:16 through 18. And in case you're wondering, what is a Gentile? Well, you're either Jewish or you're a Gentile. Doesn't matter what color your skin is. You're either Jewish or Gentile. And while you can convert to Judaism, Jewish is typically how you're born. Okay? To do with your ancestral lineage. Before Paul could be successful in his calling and minister effectively, he had to be delivered from the fear of people. That included those who knew him well and those he had yet to meet, who didn't know him at all. He had to be detoxed from the need for approval. We all need to be detoxed from that. We don't need to be people pleasers. We need to be God pleasers. If we're God pleasers, then we'll please the right people, and the other people, it don't matter. So, in essence, God was saying to Paul, you're just the postman. Some days people will like what you deliver, and other days they won't. But you have to deliver the mail anyway. So, I'm setting you free from the fear of their rejection and the need for their acceptance. Has God called you to do a particular job? Are you afraid you'll make mistakes? Count on it. You will. Just like in trading, you will get stopped out. Are you worried you'll be criticized? It comes with the turf. People will disappoint you in 101 different ways, but if you're determined to do the will of God, pray, Lord, deliver me from people pleasing, so I can share with them what you've given to me. Then go deliver the mail. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Bell, bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.